Hey guys, it's Will again. I'm going to talk today about the sectors, and what I'm going to talk about is sort of the ones that were really hot, like the tech, the growth type stocks, and just take a look at the ETFs because the ETFs show the sector as a whole, and that's a great way to see what's happening. So one of them is the alternative energy. So you've got electric vehicles, solar, and then you have like the ARC funds, which is a mixture, depending on which one. There's RK, and that's got tech in it, like a variety of things from Tesla to 3D printing and genomics and finance and stuff. So if we look at the solar ETF, what you want to try to focus on is getting the big run of whatever sector or stock you're looking at. So that's when the 50 is up above, crosses up over the 200, the 21 EMA is above the 50. See, the whole time the 21 EMA stays above the 50 and the stock touches the 50. And then this has this like a consolidation. You can't break the new highs after, two more attempts. So you hit this point, you come down, bounced off it twice, and then you have the failure. So now we're downward 50, lower highs here, and we do sort of have support at this point, which is now touching at the 200. But once you've had this big rise and then you're in the decline, this area can be tempting to try to relive the glory, so to speak. But another thing you notice here is it hit off the 50, which is kind of similar to this previous high. So lower highs. And so we're going to have to watch this one. The other thing I have down here is the relative strength compared to the S&P. So I sort of draw a line. You see how it's declining and the 50 is going down. And we're down below the 50 and the 200. So the relative strength isn't good either. So if we look at, let's see, there's an electric vehicle, sort of a mobility ETF. It's not purely electric vehicles, but this is one of them. Same sort of scenario. You had this incredible run, and then you get lower highs. Now we're below the 50, so it's not a good place to be. So there are some higher highs here, or higher lows, I mean, but so you're getting this wedge situation. So usually when you have higher highs and higher lows, and then you have lower highs and lower lows, there's a in between ground, and like you have a lower high here and as well here. So you want to see higher highs and higher lows, and we're not quite at that point. So there's iDrive, self-driving. It's a bit of a flat consolidation period. We are sitting above the 50 here, but we can't break this high. So I'd like to see this come up above and break up above the high. But, you can draw a line. I'm using TC2000. I draw with this little palette here. I draw lines. You've got this thing where you can draw, if you drag and drop the mouse, it'll show you over here on the left, the percentage gain, how long that is. So you can test to see how high is it from here to here, stuff like that. It shows you various values. I usually just use the percent gain, and sometimes I want to see like how's it done over the last month. So it shows you the timeline as well in the number of days or bars if you want to go back. So if you want to get a free trial or $25 off, there's a link in the description below. I've got the gold plan. I use I get the real-time as well, the real-time US data. And this shows a pre-market up here. So I can see, like it says 640. So I'm seeing stocks and ETFs that are trading right now before the market opens. If I go to like a shorter duration, it often shows, depending on, let's see if I can find, yeah, like so for stocks in that, you'll see like a gray bar, which shows you like the 4th was today. You'll see the stock trading in the 10-minute chart with a little gray bar there. But this also shows 7 a.m. So that's showing you that you're seeing today's trading before the market opens. Another area besides driving and solar is the ARK funds. So like RK is the sort of the innovation ETF. So you can see we had a huge run, higher highs, higher lows. Then we break, if we had this previous low, we break that with this drop and close down here. And then we have the 21 cross down. 50-day is now sloping down. Relative strength is bad. We're sloping down. Now there has been a few higher lows, but we're bouncing off here. Now we bounce off the 50. So this isn't a good look. Obviously we want to see it support at the 200, start to make higher lows and higher highs. The 50, you would like it to be sloping up, but right now these are all not looking great. Even the indices, we've had this flat consolidation period, but we're in this downward decline. You can see here relative strength is looking bad. MACD, I use price percent oscillator, and MACD is similar. Momentum's crossing down. So these are all negative signs. So the sectors that are kind of doing well, what I do is I have a scan. I click on the scan and I can show you I've got strong relative strength. You can have different scans, strong relative strength. So I want to see that the exponential 21 is above the 50. This is for relative strength down here. So instead of clicking around and sort of checking everything, I just run the scan, it filters it out. So if we look at, say, financial, it'll give you the fact that the things are looking good in terms of relative strength. So you can see relative strength here is above the 50. We had this recent pullback, and then like when the S&P was doing really well with tech and stuff recently, but now we've reestablished that increase in the momentum here. So you can see that since this date here around November, which coincides with this break, it's been an upward trend in financial. So this gives you a nice relative strength indicator in terms of sectors that are doing really well. You've got commodities, corn, obviously nice big uptrend, 21 above the 50, above the 200. Momentum looking good here, and relative strength looking good. So when I draw these little lines, these are like pullbacks and support areas. So that might be a good time to buy once you see like a couple of days of support and the candle coming up here. You could get in, and your stop would be either mental, usually a mental stop. Just you want to see a close below this point. So yeah, similarly, metals and mining, steel. This is a specific steel ETF. Uranium. PAVE is another one that's for all the construction with infrastructure. In a nice uptrend. You want to get them ideally in an earlier point. So if you go back here and you look, you see this big dark drop here, and you started to see an increase in the relative strength. If you want to get in, try to get in early, you don't have to wait necessarily, for all the moving averages to align, which would be kind of over here. It's still a good spot, but this would be like the 50 crossing over. But you're establishing higher highs and higher lows. So people that really want to get in early, You know, it's a bit riskier, obviously, but we've had quite a good run, relative strength. So it's not only a good idea to find stocks that are going up in ETFs, but ones that are going up more than the S&P. So those will be the strongest, the ones, you know, the strongest ones. Commodities are looking incredible still. You can see here how we had this pullback with the S&P because of the tech stocks that were doing well. And now we're reestablishing the commodities. There's another commodities, RJA. Same sort of thing. Copper. So yeah, that's basically, oh yeah, home builders was doing really well. So right now, home builders, you know, it's continuing to do well. You can see where it kind of broke that downtrend of relative strength, and now it's coming up. So that was about, I'm going to turn off the drawings, right around here, January-ish, and then boom. And you can see that you've got this nice uptrend. Oops, I'm not going to redraw that line. You got that nice uptrend there. So one that's perking up is energy. Well, it's been doing well here. You can see the relative strength since November time frame. But there was a pullback here. And so like there's going to be ups and downs in the relative strength. But you don't know how far down it's going to go. So, you know, you have to decide where you want to kind of get out of that. So if you had like a trend line here, you know, this is an early exit once you break that straight trend line, because you're way up high above the 50 and the 200 and the 21. You could do it when it breaks there. You can draw a series of support lows here. Like here you see how it pulled back and started going up. So you could sell right at that point. Then you have a close below the 21. That's a sell point. Over here, across below the 21. You know, there's various sell points, but then on the other hand, these pullbacks become buying opportunities. So they don't always work. They go up a certain amount, they come back. Once it broke, you know, that could be where you get out. Other people are looking to buy in on pullbacks. But, you know, this thing could keep going down, right? So you'd have if you see a little low point and it starts to pull up, that's where you buy, and you have your stop below that point. And then if it continues to go up, that's fine. Another area is healthcare. It's been in a pretty bad downward relative strength situation. So even though it's gone up, it's not been going up as well as this S&P 500. So we'll see, you know, if it can break that situation. So it's not great in terms of relative strength. And then the other one, healthcare, utilities you could look at. Utilities have been picking up, but as you can see, the relative strength isn't great. So that's where the trick comes in, because you see this thing, oh, this is coming up, and it broke a downtrend and higher highs and higher lows, but relative to the S&P. Now there is a bit of an uptrend here. Oops, I already drew that. But, you know, it's not super strong. And we do have this high of resistance here. All right, I hope that helps. If you like this program, I would highly recommend you get TC2000 free trial or a $25 off discount in the description below using my discount code. Thanks to everybody who's watching these videos, and hope that you're getting something out of it, how I do the analysis, and we'll talk to you in the next video.